last thing we'll talk about is the installment sale to an unrelated third party, which states that, hey, Scott, I got to sell my house or I got to sell my real estate, and I don't have 2 years, but I want some mitigation on this. What can we do? Well, then you call me and we say, let's do an installment sale to an unrelated third party, and we'll get the we will defer the tax that way.
Right.
What that is you would insert an intermediary holding company in between the seller and the buyer. The seller would sell the real estate to the intermediary, and the intermediary would then immediately sell it on to the buyer. It could be simultaneous closings. They will intercept that cash because you don't want to touch the cash as a seller.
Right.
So they'll hold that cash. Now, that's fine for the tax deferral. We can run that out 30 years, but I don't want to wait for my money. There are ways to go and get what are called monetization loans. B of A is not going to do this, Wells Fargo is not going to do this, but there are private lenders that will loan the seller then up to 95% of their cash in the form of what's called a monetization loan. And you just set that to marry up the terms of the loan so it financially offsets the installment sale.
Okay.
So let's just say in that installment sale that you run out for 30 years, you're going to make on $1 million, let's say you made 50 grand a year in interest, and then your $1 million payments coming in 30 years. Well, that's awesome for deferral, but I don't want to wait for my $1 million, where you're going to get $950 from a lender. And the amount you owe on that loan would be set to offset the interest, because the interest received is taxable on an income tax basis, not cap gain.
So what are the costs associated with doing it that way?
It's really very little, other than you're giving up about 6% of the sale price. And I know that may sting a little bit when you think, well, I'm already paying the realtors a few points to sell my house, and I'm going to give up another 6 or whatever. But when you run the spreadsheets out, is giving up 6 or 6.5 sometimes it is that worth not paying 37?
Right.
You know, which with in $1 million asset, your Medicare tax is 3.8, so that runs you up to about 37% cap gain in California. And every transaction has to be looked at and run the numbers, because we bat away, 8 out of 10 because there's some problem with the numbers that it doesn't make fiscal sense for the client. But when they do, that's a really grand slam home run for them, because they have solved both problems. I get the deferral on the tax, and I get use of the bulk of my capital. Let me talk real quick about the tax deferral. If you push that tax bill out 30 years and you're going to owe $100,000, what's $100,000 going to be worth in 30 years if we have 3% inflation? It's going to be worth $40,000. You'll get a 60% discount effective on the taxes by pushing it out 30 years. If it's the rule of 72, which all your viewers should look that up. Rule of 72 works both ways. You can calculate how much depreciation or erosion, I would call it, of the buying power of the dollar. Or think about what you pay in rent in 1987. You get a place in LA for $500-600 a month. Wouldn't you love to pay that now?
Yeah, absolutely.
So yes, you will fix some things. The amount of the sale would be fixed this year, and then you would just deal with your cap gains then. And you need CPA and tax counsel. I am neither. I just know how to structure these transactions.
That's the disclaimer.
The disclaimer. In no way, shape, or form is this tax advice or accounting advice. We have plenty of people who are on board that know how to do that. But we always say you need to, and we're happy to explain this, but we have to put that disclaimer out there. We're not tax professionals. We know how to work within the tax code. As I said, when you know the rules, you know how to strategize.
Absolutely.
And that's what we do.
That is great information. I think if anyone's thinking of getting rid of a property, it's wonderful to have these options. I know you have others, but that's going to be for another time.
We'll do that. They're really esoteric, out into the weeds, and we can really develop some good results for people. But listen, sometimes the 1031 is the right way, sometimes the others are the right way. It all depends on the transaction, the temperament of the seller, whatnot. So
excellent. Al, thanks so much for your time. Really appreciate it. There you go.
Thank you so much for
Hey everyone. If you'd like more information about myself or my amazing team, check out scottnellteam.com or subscribe to our YouTube channel. Thanks for watching.